Good morning, my name is Ame Mahari. I'm the Chief Compliance Officer for Blue Eagle Capital. Diverging from our earlier optimistic outlook, the S&P 500 has seen significant fluctuations in recent months. While it surged past the 5,000 level in January, fueled by expectations of earlier rate cuts and strong performances from technology companies, geopolitical tension and rising inflation have introduced turbulence to the market. Despite reaching a high of 5,250 points in April's first week, it has since experienced a decline. In light of these developments, we now anticipate the S&P 500 to remain range-bound between 4,800 to 5,100 points. This cautious revision is influenced by concerns surrounding heightened inflation levels and delays in expected rate cuts. However, we view this as a temporary trend and anticipate the market to break out of this range before the elections, supported by a low probability of recession and improving economic conditions.
I'm Natasha Tajudin, the Chief Marketing Officer of Blue Eagle Capital. Shifting our focus to earnings growth, the S&P 500 witnessed a quarter-on-quarter growth rate of 3.5% in the last quarter, aligning with our January estimates. Communication services and financial sectors emerged as the primary contributors to this growth, with companies like Goldman Sachs, JP Morgan, and Morgan Stanley surpassing earnings expectations. Notably, Meta Platforms stood out as the largest contributor to earnings growth in the communications sector. However, contrasting our earlier projections for the healthcare sector, revenue growth fell short of expectations. Downward revisions to EPS estimates for companies such as Bristol Myers Squibb and Gilead Sciences contributed to the decrease in earnings growth rate for the index. Looking ahead, we maintain a positive outlook for the healthcare index over the next 9 months. Factors such as Eli Lilly's strong earnings performance and increased offshoring and outsourcing activities are expected to drive growth. Additionally, anticipated larger M&A transactions within the sector are likely to provide major players with control over pricing, leading to improved top lines.